All right, episode 3, Hammers and Hustle podcast. I have Caeden Tinklenberg, who is the CEO and founder of Swift Public Adjusters. You guys are in Iowa, Nebraska, Colorado, and where else?
Like another 25 or so states.
Well, I know that you're primarily local to me, which is here in Omaha and Des Moines. We do a
Yep.
lot of work here. You and I collaborate on a lot of things as well. Um, But the reason I wanted to have you on is Iowa's got some shenanigans happening in the insurance industry,
Yep.
and I wanted to talk about that.
Yeah, that's sure. Shenanigans is one way to put it, but yeah, there's a lot going on.
Well, and it seems like there's multiple other states that have shenanigans going on as well too. Um, but I mean, so it's Iowa, what it HSB 256, is that right?
Yeah, they
That
actually just renamed it now that it got out of subcommittee into Ways and Means. Let me pull it up here so we have the most accurate. Okay, so of course I can't find it now, but I think it was House File 911 was one of them. I think that's 256 became House File 911.
which is kind of odd and fitting at the same time.
Yeah, kinda. All right, yeah, here it is. House Study Bill 256, which was the DIFS bill, which is Department of Insurance and Financial Services. So it's the bill that was one of the bills that was brought by the insurance division and the insurance commissioner. That is now House File 911, and it's in the Ways and Means Committee. Uh, the Senate counterpart, which was Senate Study Bill 1188, is now Senate File 591. So, just so you know, I don't know if House Bill 246, which was the governor's bill, has been renamed or not yet, and its counterpart, which was Senate Study Bill 1194. But yes, it looks like it was.
So you've been tracking this relatively closely for, well, since it came to fruition, so to speak. So
Yeah, before it came to
tell me
fruition,
what.
like
Oh, sorry. Go ahead and finish.
yeah, back in August, the insurance division, the Iowa Insurance Division, reached out to us and other stakeholders and said, "Hey, we are considering introducing some bills in this upcoming legislative session, and we want to get some industry feedback on those bills." And so, to really understand why some of this is coming to fruition now, you got to look back even further. So back in, and this is sort of specific to Iowa politics, but back at the beginning of 2023, Governor Kim Reynolds signed Executive Order 10. And the principle behind Executive Order 10 was to reduce the administrative red tape to foster business in the state of Iowa. And so, what it actually did is it put a moratorium on the administrative branches, including the Iowa Insurance Division, from introducing or modifying their administrative rules, their administrative code. And so, since then, since early 2023, the Iowa Insurance Division has not been able to update or add to administrative code, which is where most of the regulation of our industry, both sides of our industry, takes place, is in the administrative code. Relative to other states, Iowa's statutes pertaining to um, insurance regulation are relatively lean, and it's mostly done through administrative rule. So, the insurance division for a while now has wanted to, and they have prior to the moratorium, change the rules for public adjusters. Back in 2011, I believe it was, is when we adopted the Model Act, the Public Adjuster Model Act, and
Mhm.
it largely went unchanged until 2021, in which there were some changes made through administrative rule reform. Um, the division has wanted to, bring about more changes, and they have been able to. due to that moratorium. So that's why it's coming in via statute now, and they want the Iowa legislature to weigh in on some of these issues. But obviously, they're presenting the specific language that they would like to see and making the case for why the statute should read the way it is. So that's kind of the backstory, the history of it. We got the first draft in August of 24. We provided some comments on it, and by we, I'm referring to the Iowa Association of Public Insurance Adjusters, um, which I'm the president of. But we provided some comment to it. They provided a second draft in November, which we again provided comments to. The draft had changed a little bit, but not much for that second draft. And then we didn't see anything until these bills came out. So we were waiting. The legislative session started on January 13. These bills didn't get introduced until, I'm not sure the exact date, but only a couple weeks ago. So it came pretty hot and fast before the first funnel, which was March 7. The bills either had to advance through subcommittee or die. So all the bills pertaining to, what we're concerned about did make it through subcommittee. So they are still alive. And now we'll have to try and get them amended before they make it to the actual floor.
So tell me, what is the main concern from the public adjuster contractor side of things
Yep.
that's involved in these bills? Because
Yep.
you and I both know, like, I've read through the bills, and it's, there's a lot of, oh, we're going to do licensure for agencies and we're changing this, and the fees will change. But like, tell me what is our concern as public adjusters and contractors.
Yeah, so there's two bills. Again, each of those bills has a House part and a Senate part, counterparts. Uh, but I'm just going to refer to them since their names are changing, their numbers are changing, as the DIFS bill, and the governor's bill. So they're both technically from the executive branch of government being introduced to the legislature. One is, predominantly being driven and emphasized by the insurance commissioner, and the other is being pushed by the governor's office. Of course, with the support and blessing of the commissioner on the things that are specific to insurance. And so we'll talk about the diffs bill first because it's much simpler. There's really only one section that is of concern to public adjusters and contractors, and obviously, homeowners as well. And that is Division 6 of the bill. So Division 6 would add a new section to Iowa code that primarily pertains to standards for replacement cost and actual cash value settlements on property insurance claims. So presently, there is a section in Iowa Administrative Code, Chapter 191, Section 15.44, which is commonly referred to as the line of sight. There's more than just line of sight and matching in that section of the code, but the line of sight and matching is the primary reason that section of code is referenced. And so currently, what that standard is that if an insurance company is writing for a repair or replacement of certain property, and the replaced items do not match, it says that do not match in color, size, or quality, then the insurance company has to approve a repair that results in a reasonably uniform appearance within the same line of sight. So, in other words, if the repair isn't identical, then that has to meet this other standard, this reasonably uniform appearance within the same line of sight. That's the secondary standard. And so really it comes down to, what does reasonably uniform mean and what does line of sight mean?
Mm-hmm.
And there's controversy over those terms. In my opinion, I think it's pretty straightforward. Uniform generally means same or indistinguishable, or closely matching. I agree that reasonably uniform is not the same as matching, but it's something pretty close, right?
Mhm.
If you can pick it out, um, it's not uniform, right? It's not same across the board. And insurance companies don't like that, right? It's hard to get out of. Anytime that you can pick out a repair, it's not uniform. And accordingly, they have been presumably, I'm not privy to any communication that they have with the division, but presumably they've been applying a fair degree of pressure to the insurance division to um, interpret that differently. And so going all the way back to early 2023, we started receiving responses to complaints that we submitted to the division over this issue, this specific interpretation and application of Iowa Administrative Code 191, Section 15.44, where the division started saying, as long as the original material is still available, then it meets the requirements, right? Now, there's a lot of issues with that. If you're talking about a product that's, manufactured, the manufacturers may make updates to that product, right? They may use different raw material suppliers. They may, if we're talking about shingles, they may use different blending, for the shingles or do other things that change the actual product while still calling it the same thing. Um, you see that happening frequently.
So I had one. I was on an appraisal this week, appraisal panel, and our buddy Brent Johnson was on it too. He's the umpire on the panel.
Okay.
Um, and we're out in Oakland, Iowa, which is just outside of Council Bluffs, right?
Hmm.
And we're standing there. Roof just has just been replaced, like within the last 6 months.
Okay.
And we look up at the roof, and we're like, they didn't have the same dialogue.
Oh,
So you
sure.
could tell the difference in the bundles on one slope.
Oh, yeah.
Like, yeah. So whether it's whether it was Owens Corning, whatever, like landmark, whatever the title was on the shingle, like even if they're put on at the same time, what constitutes that reasonable uniform appearance? Because to us, even on the appraisal panel, and the insurance company appraiser agreed that they didn't match. So
Right.
now we're talking about stuff that's been put on at the exact same time. So it's heaven forbid it's vinyl siding that's 10 years old and has seen the better part of 10 summers and now is significantly faded comparative to something that's coming right out of the box, even if it's the same product.
Yeah. Um, can I share my screen a second to show you
Oh,
this?
let me make sure. There you go. So letting you share.
Let's just show you this picture, right? So this is an example of a repair that further skylight was replaced. The shingles on this roof were identified by both NTS and ITEL as being IKO, yeah, IKO Cambridge dual brown is the color.
Okay.
So this contractor went to their local supply house, purchased 3 bundles of IKO dual brown, and installed them on this roof, and that's what it looks like. It's the identical product as far as, you know, the name, likeness, everything of that product. Both of these shingles are IKO Cambridge dual brown.
Well,
However,
and to go one step further, so ITEL is the insurance company side. We talked about it on episode 2 of the podcast. NTS, we've talked about that episode 1 of the podcast, which is more of the contractor side. Like insurance companies don't really like NTS, so this is coming from both sides of the fence, and
mhm,
this is the result that's driven.
yeah, yeah, they both identified what the original product was. But for whatever reason, whether it be, granule composition and blending, whether it be, um, just fading for that matter. I don't know what the reason for the dissimilarity between these two shingles are. However, it's clear as day that it's not uniform. Um, you can tell exactly where the new shingles are replaced and where the old ones are.
Mhm.
According to the insurance division, in their present interpretation of their own rule, this meets the standard. And I don't think it should. I don't think anyone reading the current rule as it's written would say that this repair meets that standard. However, that's how it's being interpreted. That's what they want the law to be. Why they want the law to be that, I don't know. The insurance commissioner has stated multiple times that he believes that contractors and public adjusters are abusing this consumer protection and are somehow convincing insurers en masse that they need to be paying for, in this case, at least this whole slope being replaced when all they owe for is what you currently see here. That's the insurance commissioner's, opinion on this repair. Now, I don't think that a judge or anybody reviewing that administrative rule would come to that same conclusion. And I think that's why the insurance division is pushing for the new language that we're seeing in these bills that would specifically allow for this repair. The new language says that if the original product is available, that's all that has to be achieved,
Well,
regardless if it is or not.
that's, I mean, that's the hard thing, right? Because what's the purpose of your property insurance policy? It's to restore you to the condition prior to the loss, whatever
Right.
that may be. Now, looking at that photo, would you qualify that as being indemnified, which is
Oh,
the term that's used for that, right? Like, well, and here's the thing. So most people don't look at roofs, right? We drive around. You probably are just like me. So when you're driving down the street, you're like, oh, there's a 3-tab roof, or oh, there's this shingle. Oh, because we're just trained to do that, right? It's a matter of habit,
hmm
you know. And if I'm looking at purchasing that, the example that you showed in the picture, if I'm looking at purchasing that property, do you think that having that repair is going to diminish the value of that property?
absolutely.
I It would for me,
Absolutely.
because it's not the same, right?
Yeah.
So then that specifically goes to the, like, is it in the same condition as it was prior to the loss? And it is not.
hmm
Now, do they care? Right? And that's the next step. Do they care? Which I have my thoughts. I kind of went off on this on the last episode too, but it's similar to them hiring engineers. And I threw out names. I'm unabashed for it. I don't care. Like Rimkus, Donan, Neverheld's coming up on that too. Where if 90 or 95% of your cash flow is coming from insurance companies, are you truly are you truly a disinterested third party that's doing this inspection?
Right.
And it's kind of the same thing. Well, and I mean, I know we can be speculative of why this legislation is being introduced at this point. I suspect it's money. I mean, it would make perfect sense. It would be interesting to see how much insurance companies gave to the governor for her last reelection campaign. You know what I mean? Or the next reelection campaign. I don't know. Does Iowa have term limits? I know Nebraska does. It's 2 terms and you're out.
I don't think so. Not for governor, I don't think.
Yeah. See, in Nebraska, it's 2 terms and you're done. Hence why we have Senator Ricketts instead of Governor Ricketts now.
Yeah.
But it's just crazy that, well, and it baffles me because it's already a contract of adhesion, right? And so let's define that term. So a contract of adhesion is when one party creates the contract and the second party has no say in how that contract is created, but has to agree to the first party's contract. So then when that happens, any ambiguities in that contract go to the second party. That's the contract of adhesion, right?
Yep.
That's basic insurance principles. What's that?
Contra preferentum. Yep, is the how it's interpreted in those
Yeah,
situations where there's an imbalance
that's
between the drafter and the uh, person who is accepting the contract or not.
and
Right.
that's a fancy term, right?
Yeah,
And
that's Latin.
but that's what an insurance policy is. Uh, and so when it's hard to see, we know we know who has all the money in this relationship. It's not the individual policyholder.
Right.
It's the insurance company, right? That I mean, we went through it. I was talking about it last week. I think State Farm lost $6.1 billion in their property and casualty division last year, but yet they made somewhere like it's like $5.4 billion last year, and it's because it's all investments, right? Like we know that. Yeah, you and I both know this. This is not something new. Um, but it's interesting because it seems like Iowa in the last 12 months has really turned up the heat on not only public adjusters but contractors as well with the whole UPA conversation, right? Unlicensed practice of a public adjuster.
Yep.
I mean, I had multiple contractors in Iowa that reached out to me and like, "Hey, I got this letter. I didn't do anything wrong. I don't even know what I did. Somebody turned me in." I was like, "Well, you respond to it like you're supposed to. Like, I didn't do anything. Like, um, and it's funny. It's been in literally in the last 12 months or so.
Yeah. Well, it goes back further than that. It really goes back to the inciting event here, which is actually why I became a public adjuster, was the 33 Carpenters cases. And if you're not familiar with that, there's a contractor out of Bettendorf, Quad Cities area, who was using assignment of benefits to obtain access to people's insurance claims and using that to negotiate directly with the carrier to obtain the benefits that he thought he was entitled to based on the damage that was present at his customers' homes. And he ended up filing suit against some of those insurance companies. And the insurance companies came up with a relatively creative argument that um, acknowledging that assignments, post-loss assignments, were arguably loopholes to UPPA. However, the act of soliciting those assignments was not a loophole. And so by soliciting these assignments on the basis that the contractor was going to use them to essentially get access to represent the policyholder on the insurance claim, that was in violation of the law. And so that was back in 2019 when the first of those cases came out. There was three of them that all were kind of happening at the same time
Mm-hmm.
against different insurance companies. And so that's kind of what started this thing. The insurance division ended up investigating that contractor and sending them a cease and desist and fining them as well. But that kind of was the first blood drawn, if you want to say. And for a while thereafter, there wasn't a lot of activity. But then after the derecho hit, and some of these contractors, especially out-of-state contractors that didn't know any better, weren't aware of the history of this issue in Iowa, uh, started getting aggressive enough to the point that it caught the insurance division's attention again and resulted in investigations. And then, really, especially this past year, right? So 2024 was significant enforcement efforts against contractors for UPPA. And that included multiple cease and desists, as well as just informal letters saying, hey, you're on our radar. You better
Mm-hmm.
check it out, right? And so, really, regardless of what your opinions on UPPA are, um, the truth is that the insurance division is enforcing their interpretation of the law, and that is having a chilling effect on the role that contractors play in the, claims, especially on the homeowner side, the claims adjusting space, and really taking away access that consumers had to professionals that were more experienced and more informed than policyholders were. Now, I'm not going to come on here and say that every contractor should be representing policyholders. I mean, you and I both get files from contractors that are not in a good condition, not in a good shape,
No, not at
due
all.
to due to the contractor, fumbling the bag. But um, regardless, contractors do know the law a lot better than most homeowners because they do deal with it. And at the very least, they are able to recognize when the homeowner is not getting a fair shake on their claim,
Mhm.
and just shining lights, on that issue because most consumers are ignorant, right? They don't know if they're entitled to 20,000 or 200,000 most of the time. And that ignorance is what insurance companies take advantage of. So at the end of the day, removing contractors from the equation opens up the door for consumers to be taken advantage of, without, again, I'm not going to necessarily call contractors watchdogs, but, someone who would recognize and speak up if things don't smell quite right. So they're largely off the table now, and that has created a vacuum, especially at the, um, on the smaller claims where these people, they don't know if they're being treated well. If they do know that they're, not getting what they're entitled to, they don't really have access to a lot of resources, because contractors legally can't help them. Attorneys are not going to take claims like that on a contingency basis. They might take it on an hourly basis, but the economics of that don't work out for the
No.
homeowner, right? So really, all that leaves is two potential entities: public adjusters, which in Iowa, on non-catastrophe claims, we're presently not fee capped. So my firm will take, $15,000 claims at a third, or $30,000 claims at 25% or whatever. We have a formula based on the claim size and other factors, how old it is, who the carrier is, et cetera. To sort of,
I love that you factor in the carriers. I love that.
yeah, to determine, what an appropriate fee rate is based on the risks of getting that claim paid or not. But uh, one of these laws, the governor's bill, as part of the new regulations, seek to put a 15% fee cap across the board, which would essentially remove our ability to handle, any five-figure or smaller claim. It's just not economically viable. So if anyone's handling those types of claims, they're doing it on a charity or pro bono basis, because you're certainly not making money, at least not if you're doing your full job and handling and performing all of the duties that most people would expect a public adjuster to perform, for that type of fee, right? You might be able to do a very limited representation, right, where you maybe file a proof of loss and send a couple emails and then kick it to appraisal. Um, but you're not, spending hours meeting with the adjusters, negotiating, writing your own estimate, or doing anything like that on, five-figure claims, for 15%. At least not at any type of volume. So that creates that issue there. The other entity is the insurance division. When I was making this case in front of lawmakers, I said the insurance division has taken contractors out of the equation. Attorneys were never in the equation. This bill will take public adjusters out of the equation. There's no one else here to represent the interest of policyholders. And the commissioner said, well, that's not true. They could file a complaint to us and we would help them. Exactly, right? I mean, you laugh because right? We've filed many, many, many complaints. And the division, if they feel like they can definitively say that the insurance company is following the law, they will. They'll say, The insurance company is following the law. They're following the terms and conditions of the policy. So they will absolutely affirm if they believe that the insurance company is doing what's right. If they can't confirm that, in other words, if the evidence is irrefutable that the insurance company has, we'll just use a simple one, breached communication timelines, right? If we
Mhm.
have history going back 3 months and 10 different emails, right? And a couple letters, returned receipt, or we have proof that they received these communications and they have not responded, that's clearly a violation of, 191.15.41, which is their communication deadlines. The insurance division will say, well, it looks like they've responded now,
Yeah,
right?
that's
They,
cool. That's cool. They're good. They're good.
yep,
They're just fine. Yeah.
yep,
So I mean, going on that part of it, and I'll put insurance divisions on blast across the country, right? Because I have been on both sides. So I've been on the policyholder side and the insurance company side, and they never do anything. Like I have yet to see a Department of Insurance complaint effectively change the outcome of the claim
hmm,
yet.
hmm,
And not extensive, but I would say upwards of 100. I've been
hmm,
involved in upwards of 100 on both sides.
yeah,
And I mean, that's not a small sample size, but like your average policyholder, they're going to file one, maybe two complaints in their entire lifetime.
yeah.
You know, maybe.
And they don't, and they, again, they don't know the law, right? They don't even know what to complain about is the problem. They know that they're not being treated fairly, but they don't know what being treated fairly looks like as far as the measure of the law goes. And so the insurance division has stated multiple times well, not multiple times, every time in their response letter to a complaint, we cannot get involved in disputes over interpretation of the policy unless they agree with the interpretation of the policy. Then they'll say, yeah, they're following the policy. But if they don't, right, they're not going to say your insurance company is not following the policy. They're not going to say your insurance company is not following the law. They're not going to say, yes, your insurance company is ignoring obvious and apparent damage, right?
Mm.
They never conclude ever in the many, many complaints we filed. They've never once concluded, yep, the insurance company did something wrong or bad here. Never, never. And that's the issue, right? That's the issue. And that's with us filing these complaints or helping our
Mhm.
clients file the complaints in the states that don't allow us to file the complaints directly. So we are painstakingly, you know, explaining out the facts, the history of this claim, pointing specifically to which rules and laws we think the insurance company has violated, right? With clear and convincing evidence, in our opinion, as to the violations. Consumers, they're not even doing that, right?
Yeah,
Uh,
no.
so if the only role that the insurance division allegedly has is to investigate violations of the law, and they only do that if the complaint clearly sets out the case for the violations of those laws, and consumers are essentially ignorant to what those laws are, how in the world would the complaint process have any sort of effect for 99% of consumers? It wouldn't. It doesn't.
No. Well, and that's what I shouldn't have laughed so hard when you brought that up when the insurance commissioner said that, but like the fact that they say that they are going to be the watchdogs now is laughable.
It is.
It's
It should,
laughable. It's untenable.
yeah.
And there are contractors, and I'll say this: there are some contractors out there that shouldn't touch an insurance claim because they either A, they don't know how to handle it, B, they overstep their bounds, or C, that they get so wrapped up and it becomes a personal vendetta for them to get this claim resolved. Right now, like I every claim that I take on, and I'm sure you're the same way. Every claim that I take on, there's a personal interest for me to get that covered because I feel for the policyholder, right? Like I'm empathetic toward them, and
Yep.
that's what makes me a good public adjuster. Is that okay? I know the industry, I know the environment, I can navigate it. It's kind of like steering a ship, right? Oh, there's a storm over here, we're going to go this way and we're going to go around it, and eventually we get to the destination, but it may take some time, and there's never a silver bullet there's not one silver bullet that magically cures a claim, right? Like, it's like, oh, we'll try this, well, that didn't work, well, we'll try this, well, that didn't work, we'll try this, and but we have all those tools in our toolbox to do that. Now, if you there and there are a lot of good contractors that have a handful of those tools that they can use to prevent it from getting to someone like ourselves, right? So we don't see the influx. Now, I've been saying in the last 6 months that I think that we're going to see an increased need for public adjusters across the board because of all of the roof payment schedules and the weird wind and hail deductibles, and just the fact that when I started in this industry, homeowners policy was like 35 pages, maybe 30.
Yeah.
And now it's 60, 70, 80 with 2 pages of endorsements. It's crazy. It's crazy. The industry is just trending that way, is that we're going to end up having to, like, almost even a simple wind hail claim is going to end up in a public adjuster's agency. It just is.
Well, you know the reason for that, right? It's because all the contractors and public adjusters were abusing. We're abusing all the coverage, right?
Mm-hmm.
Convincing insurance companies to pay billions, which they shouldn't have to pay. And,
Yeah. Here's the two wind damage shingles, and
yeah,
now you get to pay for a whole roof. I When I was an adjuster for Liberty Mutual, I did commercial,
yeah,
and I remember I looked at a motel in Columbus, Nebraska,
mhm,
and it was probably, I think it ended up being like 80 or 90 squares, so not super big, but big enough. 7 shingles. It was a 3-tab roof.
yeah,
7 shingles, not repairable. I mean, the 3-tab roof was 25 years old.
yep,
It blew 7 shingles off. I ended up having to pay for it because I mean, it is what it is.
yeah. It
But
There are ways out of that, right? I mean, there's you can write roof exclusions, right? If there's a roof that's especially prone to damage, right, or it's old, you can exclude that. And I think that's appropriate and should be explained to a property owner. Hey, this is a specific condition in your property that makes it exceptionally risky for us to insure. So either, you know, that's why the premium's so high, or you can elect to exclude it. I think that's great. I think that's how insurance should work. That's how it should be sold. That's how it should be consumed. The problem is those conversations aren't happening. The insurance agents want the business so bad that they're not discussing these things. They're just writing whatever policy they need to write to get them replacement cost or whatever. And unfortunately, those policies often, sometimes initially, but often at renewal, um, get slapped with all these new endorsements and restrictions and limitations without there ever being any discussion of it. And, that's, I think, a huge issue. And part of what the Iowa Association of Public Adjusters is trying to prevent and cure in our amendment to the DIF's line of sight bill. And so we talked to multiple legislators, and the insurance division and the governor's staff as well. And they're insistent that insurance companies need a way to exclude coverage for matching, and still be able to write an insurance policy, a replacement cost policy. Because under the current rules, they can't. If they write a replacement cost policy, they owe for matching or reasonable uniform appearance, no matter what. And apparently that's creating a crisis, right, and driving insurers out of the state. I'm not convinced of that, but let's just assume there is merits to that argument. What would an appropriate cure look like? Well, it would look like a endorsement specific to the roof or siding or whatever, that the insurance company has concerns about insuring for a match. that says we are not covering any undamaged material due to, wear, tear, fading, obsolescence, whatever criteria they want to throw in there. Um, but in exchange for that, you're getting a premium discount and you have to sign this page agreeing to the fact that you read this and understood what the consequences of this endorsement are, because you're giving up rights that are presently protected by statute. And that applies not only to matching, but we have a provision in there for ordinance and law, a provision in there for roof schedules, a provision in there for cosmetic damage exclusions,
Mhm.
all these things which are coming about on the basis of the only way we can continue to insure this property is with these exclusions and limitations. If that's true, let's allow it, but let's make sure the consumer is informed and has the ability to make that decision and that they're actually receiving the benefit, in other words, the premium discount of accepting a policy with these restrictions.
Well, and that's fantastic, and that's one of the reasons I wanted to talk with you today is because of the fact that I had a meeting with a local roofing company here in Omaha who handles Iowa, Nebraska. Right, they're looking at setting up shop in Des Moines, which that's a logical choice if you're in Omaha that you move to Des Moines. That's an easy drive.
Mhm.
But they'd said, "Hey, this guy named Caeden Tinklenberg reached out to us about this." They're like, "Do you know him?" Assuming that all public adjusters know each other. And I said, "Oh, I know Caden. Yeah." And they're like, "Well, he's talking about some weird bill that's," and they're very politically connected Nebraska side.
Mhm.
And so they were the conversation revolved around providing some training, exactly training to them. But then it kind of uh, evolved into a conversation about how can we prevent what's happening in Iowa from happening in Nebraska. And he's like, "I can go down to the attorney general's house right now and I'll walk right in."
Mhm.
That's how connected he is. And to the point where I think we're going to start looking at creating a contractors association like in Nebraska that provides some type of lobbying efforts to prevent what's happening in Iowa from happening in Nebraska. Now, I totally agree with you. Like these endorsements, so like the roof schedule, cosmetic exclusion, ordinance and law, matching, like all of those should be listed out on the policy, and the policy holder should have to sign off on them. But I think, you know, not only is it the agent's fault, but I think the fact that the insurance companies aren't doing their due diligence with underwriting is another huge issue. And it's been that way for 20 years, ever since I got into the industry. Like they'll go, the agent will write the policy, insurance company will take the premium, and they've never set eyes on it,
Mhm.
not once. And then they're surprised when they're like, "How did this place burn down?" It was a giant fire hazard. That's how it burned down. Like you insured it. You can't be mad now. You can't be mad after the fact. Do your due diligence. And so I think that there's a thing that needs to be put like task to the insurance companies is that they need to do their due diligence in underwriting the policy within I don't to be honest, I don't think any of those endorsements should apply unless they can provide an underwriting report within the first 60 days of the policy. To be honest.
Yeah, the only issue I have with that is it costs money to do that, right? To send someone out, there are costs associated with that. That being said, I think you could probably rely on the homeowner to provide those things. When I go to insure a new car, I have to send photos of the car. I have to prove how much, mileage it has, all that sort of stuff. I have to jump through more hoops to insure a car than I have to for my own home, right?
Mhm.
And I think that's crazy. But it is what it is.
Well, and I mean, and that's a great idea too. I mean, how I know when I used to be my personal stuff was insured with Travelers a
Mhm.
few years ago, and we had a hailstorm blow through, and they had me take the hover pictures. There's a link that they sent me, and hover, for people that are listening, is a measurement report. So it measures the roof and the sides, siding and gutters and all of that. And you walk around, you take, I think it's like eight or nine photos, and you send it in, and it's super easy process. I I don't understand how that's not a thing. I've seen commercial properties that they've insurance companies never set eyes on, not
Yeah,
once.
that's crazy, especially large industrial and large multifamily.
It,
Uh, that makes no sense to me.
well, and then they're mad. They're like, well, how do we insure a property like this? Well, did you send somebody out, or
Yep.
did you ask for photos?
Yep.
And so I mean, there's accountability on both sides that I think that could really rectify the situation without. It feels like we're having a knee jerk reaction. You know what I mean? Like, yeah, we have like we've been paying for things that we shouldn't have been paying for a long time, so we're going to go all the way to the other side, and now we're not going to pay for it. Like, we're going to try to not pay for anything.
And I'm not even convinced that the first part, the premise of that is true either, right? And paying for stuff all along that they shouldn't have to. I'm not convinced of that. I'm sure there are plenty of anecdotal explanations of that, being the case, right? Where maybe it was prior damage or, who knows what. But I think to every one time that happens, 10 times insurance companies are not paying on claims
Oh,
that they should, and the consumers don't know how or don't have the means to do anything about it. And they just take it on
well,
the chin.
and they do it on purpose. So, do you
Oh,
remember Mad Sky?
oh. Do I remember Mad Sky? Yes, I remember.
So
So,
Mad Sky was a roofing supply company that operated nationwide, just for everybody else's like information. And I remember when was at Liberty Mutual that I was with at the time.
they did a lot of.
I was a staff adjuster with someone,
Yep.
and they were instituting Mad Sky, and it was a 6% decrease in the amount of shingle prices. And I remember their justification. Listen to this. Their justification was, that's okay. The roofing contractors make enough. They don't need that 6%. That was how they explained it to us.
Yep.
It makes total sense, right? Like, all the roofers don't need that. We'll take it though. That's cool. Yeah, we'll
Exactly.
take that 6%. But if you think about, like, on a state farm claim, 6% of that state farm claim, say it's $600. That's a $10,000 claim, right? $600 over a million claims. That adds up real fast.
So Mad Sky still exists. I don't know if you can hear this beeping or not. I'm trying to shut off
No,
the
no, I can't hear it. You're good.
um getting blown up. But Mad Sky restructured now into a company called AccuServe. Serve had a big booth at IRE, which Badger spent a lot of time at.
Oh,
Um,
I bet he did.
yep. And I was talking to one of the representatives, and she sort of explained, yeah, we used to be Mad Sky, and blah 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 blah. Our business model now is to, I think it was Mad Sky, and maybe was it Code Blue, maybe some there was some sort of merger there with
Oh,
another.
I've got stories about that one too.
Yeah. So, anyways, we got to talking, and she was explaining the business model and how it all works, and so I asked, so are you guys contractors? No, we're not contractors. Okay, so do you verify that your contractors are licensed and insured and that sort of stuff in order to be part of the program? No, we kind of just rely on them to, make sure that they're all in good order and whatnot. I was like, okay. I was like, so you guys kind of feel like the adjuster role then? And she's like, yeah, we're the adjusters. So I was like, so the contractors are your eyes and ears. I mean, because I'm very familiar with Mad Sky and how that all worked. So I was like, the contractors are your eyes and ears. They're like a ladder assist for the adjustment program. Yeah, that's a great way to think about them. They're the ladder assist. So they're getting you guys, all the documentation, and you're submitting it to the insurance company for their approval. Yep, that's correct. And I said, okay, so do you guys have an adjuster license or anything? And she's like, no, we're not technically adjusters, so we don't have any adjuster licensing. And I said, so who's adjusting the claim? She goes, well, we're adjusting the claim. And I said, but you're not licensed. And she goes, yeah, I guess you're right. Yep, we're adjusting the claim without the license, but the insurance companies are fine with it, so I'm not too worried. I don't know. I don't know how you can get upset about UPPA and not have raging alarm bells going off with programs like that, which are clearly adjusting claims, clearly being involved in the material ordering and construction process, and not be licensed or regulated as either the contractor or as the adjuster.
Well, and that whole like that poor gal had no idea who she was talking to. First off,
Oh, for sure not. I mean, it's right on my pay. It says the public adjusters right there. Like I
well,
told her,
okay, so you gave her forewarning. It was on your
oh
shirt.
yeah,
Okay, I respect that,
this was
but like,
not on hidden camera sting. It was literally just having a conversation with her.
uh, but well, and that's like kind of the adverse of that, right? So like we've talked about UPA and contractors and all of that earlier,
Mhm.
but I mean, talk about the fact that we have adjusters acting as like ladder sis.
Yep.
Like, so I had a claim that was in Glenwood, Iowa, that I got paid, and there's a certain guy from Hancock Claims Consultants, that's the name of their company, who are not adjusters, that runs around Omaha. And I've the only time I've filmed people on inspections twice, and he was one. And I watched him on a roof. He drew his test square, which is a 10 by 10-foot area. That's where you look for hail damage. And took him 30 seconds, and he walked away. And I filmed it. And I
Yeah.
sent it to the insurance company. I said, "Do you think this is an accurate adjustment?"
Yeah. Reasonable inspection.
Yeah. And like instant, "Oh, we're going to approve your estimate." I literally, like 2 days later,
Uh,
I'm like, "Are you kidding?" And this guy runs all over town. He works for everybody. Like I've run into him probably 10 times, and all 10 times there's not an ounce of damage. And let me tell you what, I'm not one that chases damage. Like it's either damaged or it's not, and I'll tell you, it's damaged or it's not. That's just who I am.
mhm.
And like this guy, he's the worst. But the problem that I have with it is that when I was an adjuster, I was licensed. Christ, I was licensed up until 2019 as a Florida adjuster,
Mhm.
and I had my license in 48 states, maybe. I mean, a lot of them. But Nebraska doesn't require licensing, and there's one other one. But these guys running around doing, and don't get me wrong, I love the hustle. Like these guys will get on roofs that I would never dream of getting on, and they do their thing. But if you're going to act like an adjuster, they should be licensed, which is what they're doing.
Yeah. It creates this paradox, right? Where again, kind of like the insurance division, they give themselves the authority to deny claims, but anytime there's reasonable, suspicion of liability, it's out of our hands, right? We're not responsible for it.
Yeah.
Same thing happens with these other companies, that if there's not damage, they'll confirm there's not damage. Clearly, that's our decision. We're making the decision definitively, there's no damage. But if there is damage, well, we're just, here to gather photos, right? We can't make the decision. We can't be held responsible to, what we're documenting or the decision made based on our documentation. And that, allows the actual decision to take place in the ether where no one's responsible for it, right? The person who's in the field, who's most equipped and in the best position to make that call isn't responsible for it, and you can't hold them liable. But the person at the insurance company, they've never seen the property. They, will turn around and say, "Well, this is what was documented by this person," right? So they'll put it back on that person, even though you can't hold that person accountable in any way. And that's very problematic. One of the reforms I would like to see implemented in Iowa, not this year, there's way too much going on. It's too late already, but is that at all times there is an adjuster assigned to the claim and accessible um, to the policyholder and their representative that has the authority to settle the claim,
Mhm.
right? That's a huge issue we run into. I can't make the decision to settle this claim. I have to run it past management. Well, once they leave the room, any influence or, potential control we have over the conversation or the validity of the information that's being passed to the actual decision maker goes out the window. And so we're playing telephone essentially to try and get
Hmm.
clarity. And it's difficult for us who are professionals and do it every day. Imagine how much more difficult it is for your average consumer that does this once or twice in their life. It's impossible, and that's
Yeah.
like, by design.
Well, it's funny because you say that, and I had a conversation with um like a good neighbor earlier, like early last week,
Hmm.
and just it's a small little house. It's some hail damage. It's not like, and it's definitive. And so I sent in my photos and an estimate, and it's a friend of mine. Otherwise, I wouldn't take something on like this. And the adjuster calls me and
Yep.
says, "Well, my TM reviewed this, and they're going to have to file a second claim." And I
Let me
said,
put your TM.
"Well," and I said, first off, why would they have to file a second claim? Because all of this, like, I don't have any photos showing that this particular shingle didn't have damage on it from the beginning, first off. And secondly, can you prove that there's been additional damages created to this? And she's like, well, my TM, this is literally my TM said that they're gonna have to file a second claim. I said, well, let me talk to your team manager.
Can't do that.
And she goes, well, I'll put it up and see if they should give you a call within the week. And
Well,
I said, like, literally on the phone, I said, I'm so sorry, because they put you in an untenable position. They said, this is like, they had a rationale, and they said, this is what we're doing. They didn't tell you why they made that decision. And then they send you to come and talk to me, the public adjuster, who probably knows 100 times more than you do in this particular instance, especially about this particular claim. And they're essentially sending a lamb to the slaughter. And I feel really bad for him. And that's how I ended the phone call with him. Like, because it's not their fault. Like, that's on their management. It's just mind blowing. And it gets to the point where you hear stuff and you're like, I cannot believe I'm hearing this. And that's as a professional. I do this every day. Like, I can only imagine if my mom or my cousin or someone who's never handled a claim in their life had to walk through that. That's terrible. Like, it's just really unfortunate.
I mean, speaking of Big Red and things like that, where the people actually, the frontline people have no clue what they're doing, right? They have no authority. They have they have responsibility without authority, which is crazy, and without any sort of training. So I have a claim right now, where the date of loss that was recorded in their system is incorrect. Um, and it was put in as the date that the claim was made, right, rather than the actual date of loss. And the claim was subsequently denied on the basis that there was no storm on the date of loss. And so this must be, prior damage, which it was. It was from multiple months earlier, right? Uh, and so we requested that the data loss be changed to when the storm actually occurred. Well, we can't do that. So why can't you do that? Well, once it's set, it's set. I was like, that's not true. I've had claim data loss be changed before. I said, why don't you go and look at the notes from when this claim was entered? Well, yep, it says there was a storm back in May of this year, uh, but that's not when the data loss was put in. The data loss was put in when it was claimed. I said, so you're telling me that the insured notified you when the correct date was. You guys put the date in wrong. Now you're denying the claim on the basis that the date of loss is incorrect, but you refuse to change the date of loss. Yep, that's correct. And I go, like, what are we supposed to do? Sure, we can file another claim, theoretically, But one, we run into potential prompt notice issues, right? Because we're a ways past this claim now. This is
Mm.
probably a year and a half ago from this data loss. So we run into notice issues if the policy contains a 1 year notice. So the claim could potentially be barred that way. Or we run into underwriting issues because now the policyholder has two claims, right, under their policy, which is problematic. And so I explained that to her, and she said, well, even if we did change the date, the claim would still be denied. And I said, on what basis? And she goes, well, we've already determined that there's not enough hail damage here to cover. And I said, no, you determined that the hail damage that is present didn't occur on the date of loss. That's completely different. She says, well, I don't see how you see it that way. I said, I give up. Like I've gone through every explanation and reason for why this legitimate damage that occurred during the same policy period should be covered, and the only reason you're denying it is because of your own mistake that entered the data loss incorrectly. I mean that the case is going to have to go to an attorney because I can't get through to anyone that has, anything between their two ears. And that's just one example of things like that we run into every single day.
Oh, yeah. Big Red is the worst with that.
Yeah.
I have a Bennington tornado claim that you would, it's not it would hurt your brain if I explained it to you. They've said, okay, so the synopsis is they were within 100 feet of the tornado,
Okay.
right? The father-in-law was in the storm shelter, has COPD. Literally, it sucked all the air out to where he couldn't breathe for almost a minute. And so they filed a claim. Exterior has hardy board siding. All the siding has been pulled away, so it rattles.
Yep.
All the window seals have been sucked out. There is debris damage to the brick and the stone facade. It's an expensive house. We'll put it that way. Has 50-year presidential shake shingles on the roof that have debris gouges. Just like tornado damage, right? Like anybody would be like, yeah, this is tornado damage. And State Farm sends out, I'll edit that out. So Big Red sends out.
I think everybody knows what you're talking about.
Yeah, I'm sure. Plausible deniability. So Big Red sends out the first engineer who graduated in 1965 from college to look at the windows and says, I'm only looking at the windows. And so he only looked at the windows and determined that it was wear and tear, not storm related.
Okay.
So we push past that. We get a State Farm to send out an actual State Farm field adjuster, which, and to be fair, they're like everyone that I've run into, like actual State Farm field adjusters are fantastic. Like I've had a really, really good luck.
I do not share that experience, but
which is, yeah. And, but so he comes out and goes, on multiple occasions, I don't know why they sent me out here. It should be in the large loss team.
Mm-hmm.
Calls my homeowner, not me, calls my homeowner 2 weeks later, says, I wrote an estimate for $700K. I'm sending it up for approval. We get a call. Yeah. And of course it wasn't on a recorded line. And then a week later, we get a call from the desk adjuster who says they're sending out a second engineer. The second engineer from Neverheld comes out and says, I'm only here to look at the structural damage.
Okay.
He says there's a wall on the back that is bowed out. He has a picture of him holding a 6-foot level against it, and you can see the gap in the level. So this was storm facing side, right? So it pulled the wall and cracked the drywall in multiple places.
Okay.
He says, oh, it's elastic damage and some mud and spackle should be able to take care of it.
Yeah. Drywall, super elastic.
Yeah. Yeah. And so that's that claim.
I believe.
The only reason that I'm involved is because no one would call him. I mean, now granted, there's all these other things that have happened since then. But yeah, he tried for 8 weeks. They had the original adjuster out. and no one would respond to him. He's like, how can you pay me this minimal sum when all, like I see the damages? Like his soffit still has dirt and debris plastered again, like on it.
Yep.
I mean, he was that close, right? And I feel for him because if I wasn't involved, he would have no idea what to do.
Right.
Either he would just be like, forget it, and I'll move on. Like, I mean, there are places on his roof where you can see massive gouges out of the shingles where
Yep.
something has struck it. But here's 168 shingles of a shingle that is 24 years old. Good luck.
Yep.
You know,
Yeah, there's a significant imbalance in the power and the information, the resources, the network, um, that insurance companies all leverage, right? And whether it's, explicitly or implicitly, just based on, the very nature of the process, consumers are at a significant disadvantage, except for in states where there are good consumer protection laws that provide consequences for when insurance companies are found to have not done the right thing, right?
you know,
So back to Iowa, one of the changes that we're proposed as an amendment to the governor's bill actually is to essentially institute um, a prompt pay interest penalty, similar to Texas Prompt Payment of Claim Act. And so if an insurance company is found to have um, wrongfully underpaid or wrongfully denied a claim, they owe interest on that from the date on which they should have paid until the date on which they pay not only the underlying claim, but the actual interest penalty itself. So we're trying to push to get that added to that bill as well. I think that would go a long way, a really long way to helping rebalance that imbalance and giving consumers, a little more leverage and ability to recoup from insurance companies not doing the wrong thing. Because presently there is no consequence. If an insurance company underpays your claim or delays it for 2 years, they pay the underlying claim and they get away with it, right? There's no consequence, no consequence at all. And that's why they do it, right? Why wouldn't you? You know, if you could pay, if I have a bill here, right, and I could wait 2 years to pay this bill, and the only thing that would happen is I would just owe the amount of the bill. Why wouldn't I wait 2 years? That's it's crazy.
not only that, and then that money that's sitting in your coffers is making 10 or 12% interest, like
Exactly.
interest because of an investment.
Exactly. Yeah.
Why would you not?
Right. The float.
You
Precisely.
know, and that's how the insurance companies are making their dimes. That's how they put it all together.
Yep. Instead, they're trying to cap our fees, which the economic basis for price controls, which is really what they're attempting to do, right? A price control is to keep resources or goods accessible to all echelons of a market when there's a shortage. Um, what ends up happening in our specific case is we're not actually fee capped. The percentage rate in which we charge is capped, but our ability to earn isn't capped. So all it does is incentivizes us to sell our product in bulk, right? In other words, handle larger claims, because that's where the economic value is. Handling $1 million claim at 15% is a lot better money for probably about the same amount of work as handling a $20,000 claim at 15%. So all it does is create a shortage at the bottom of the market for the smallest claims, um, and creates a vacuum where there's no representation for those people. And I could explain that to the insurance division and the lawmakers till I'm blue in the face. But all they do is keep coming back with this stupid argument that, well, we need to cap fees to make sure that policyholders have enough money to rebuild to actually make the repairs. And if public adjusters are charging 25, 30%, the consumers don't have enough to make those repairs, which is true. However, absent our involvement, the consumer is getting zero, right? Or
Oh,
getting
oh,
nothing, right? The very basic,
minimal.
right, the very basis of our involvement is that we're getting extra money that our clients did not have before, right? That's the very basis of our involvement. Um, is that we're providing a net benefit. So that argument to me is it falls on deaf ears, right? It's problematic. It doesn't actually exist, right? There's
Mm.
very few cases except for immediately after an event where a public adjuster is hired on the spot, which quite frankly never happens in the state of Iowa. It just doesn't. It just doesn't. Sure, there might be a couple door knockers running around after a hurricane or some or a tornado or something, maybe. But we're talking the tiniest of tiny percentage. 99% of the time, public adjusters are coming in well after the fact, after the insurance company has already had their bite at the apple, their chance to get the claim right, and we're brought in to straighten things out.
And fuck the
Or
claim is what I like to say.
yeah, that's one way to put it.
Yeah.
Or the client has had claim experience in the past and recognizes that they're they're stupid not to hire a public adjuster. We have a lot of clients that are repeat clients, and anytime they have a claim, they call us before their insurance company because they know that's the best outcome is through us. In those cases, right, we're not dealing with ignorant consumers here who were fleecing, right, to get them to sign our contract to give away a third of their claim, right? That's the narrative that's being peddled, and that just does not reflect what the actual reality of the market is.
No. And that's not what happens, right? Because, you know, we I don't charge much. I charge 10% on my PA stuff, but that's not my breadwinner either. And the reason that I'm at 10% is because of the fact that I know that everybody that's involved is going to be happy. The contractor's going to be happy, the homeowner's going to be happy, and everybody's going to make their money.
Yep.
And 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 I do it more of a service than I do as a money driver. Like I do training and all of this other stuff that's what pays my bills. This is more of, hey, I'm helping people out, right? And that's
Mhm.
why I'm only licensed in 2 states, because I don't want to be worried about traveling down to Texas. I don't want to worry about going out to California.
Right.
Well, when the wildfires happened, I had 3 public adjusting firms reach out to me and be like, "Would you be willing to go out there?" And I was like, "No, I'm good. I don't need to see that." Um,
And that
but
works for you, right? And that works for you.
yep,
But the consumers still need help. They need someone. Unfortunately, there's not enough people out there willing to do that work for 10%. That there
no,
just isn't. Or 15% or 25% for that matter, right? On small claims, you have to charge a higher rate. You just have to in order to cover your job, in order to stay profitable, in order to be sustainable,
mm-hmm,
handling any type of volume. Sure, you can do favors here and there, right? You mentioned that earlier. You said I'm only handling this claim because he's my friend. Otherwise, I wouldn't get involved in a claim of this size. That's absolutely true and legitimate. But if he wasn't your friend, he still needed the help, right? He
mm-hmm,
still needed help from somebody. And if he didn't know a guy like you, who else is he going to call? I'm not going to do a $20,000 claim for 10%. I'm just not, right?
no.
Unless it's like, you know, my own brother or something.
Well, and
So,
it's just sad that that's where I mean, the market in Nebraska is even, I would say, even slightly worse than Iowa at this point, because once you get to a certain point in Nebraska, like you can't even demand appraisal,
right. Yep.
like because it's a two-party state. So what that means is, so Iowa is a one-party state, meaning if I demand appraisal in Iowa, it has to go to appraisal.
Obligatory.
Yep. In Nebraska, if I demand appraisal as the public adjuster or the homeowner, the insurance company go, nah, I don't agree, and it doesn't go anywhere.
Yep.
So now your only option is to go,
And
which,
Nebraska has at least somewhat of a fee shift, attorney fee shift, in their laws. It's not very good, right?
no.
So you only get your attorney fees um, if you're awarded more than what the most recent offer from the insurance company is. And that most recent offer can come at any moment prior to that, final judgment or award. And so what they'll do is they'll drag out the litigation process, make your attorney spend a lot of money, and then at the last moment they'll offer to settle for what your demand is. And then you're just out all that other stuff because you'd be stupid to go to trial and expect to get more than what you're demanding, right?
Hmm.
And so you lose out on your attorney fees that way, which is unfortunate. I think it should be that they have one option, one chance after they've been notified that they're being sued to make an offer. Kind of like a civil remedy notice in Florida, similar sort of
Hmm.
concept. Um, or an offer in judgment. In Iowa, it's called an offer to confess judgment, where basically, in response to litigation or to being sued, you say, this is our offer to settle. And if you don't recover more than this offer, you owe our fees, right? I think that's a tool that I don't understand why insurance companies don't use that more often. But I think that's a great way to say, the biggest critique against attorney fees is that it's abused, right? That all these frivolous lawsuits are being brought in for five, 10, $1,000 more than, what the claim should actually be settled at. And, since the insurance company is technically underpaid the claim, now they owe all these attorney fees that are, 10 times what the actual dispute was. And that's the reason for the argument against attorney fee shifting and what happened in Florida is that that was removed. Attorney fees were removed in most cases. Um, so that's a big critique of one-way attorney fees. But I think keeping in mind, a robust offer to confess judgment as being an option for insurance companies to get out of that by making it a fair offer
Hmm.
that actually does come close or is in line with what is owed on the claim. And if the jury or the judge or the appraisal panel, for that matter, concludes with them, then they don't owe the attorney fees. So I think there's ways to do it to create leverage without creating a system that can be abused or be critiqued on the basis that it's being abused. But it's a very nuanced argument and extremely difficult to explain to legislators to get them to support and sponsor and push through a bill like that. So
Yeah.
it's a challenging situation.
Yeah. Well, I've kept you for almost an hour and a half.
Nice.
Um, but okay, tell us how we can support you in Iowa. Will support you anywhere. Like, give me your I don't know, your sales pitch.
Sales pitch. Um, so I run two different organizations. The first is the Iowa Association of Public Insurance Adjusters. So we're open for public adjuster membership for anybody that is licensed as a public adjuster, whether on a resident or non-resident basis in the state of Iowa. You are welcome to join as long as your license is in good standing and you pay your dues. We'll have you. Um, we also have associate membership for non-public adjusters. So contractors, attorneys, other vendors are welcome to join as associates. There's a little bit more of a due diligence process for reviewing those members, but welcome to join and be a part. You just won't get a um, voting membership. And then we also have sponsorship opportunities and donation opportunities. If you feel really called to support our cause, we're happy to consider what a partnership would look like to support our organization. That's the Iowa Association. I also run the American Adjuster Association, which is a national organization. Um, we have three levels of membership, just our general or associate membership. And then our next level up is our state board advisor membership. And then the third level is the national board advisor membership. What's unique about this organization compared to other national orgs is that we are solely focused on lobbying. That's all we do is political action. So we get involved in obviously legislative legislative matters in multiple states. So we're involved in Illinois right now, Iowa, Texas, potentially Washington, West Virginia. They have a bill with a 5% fee cap in it, which is
Oof.
crazy.
Oof.
Yep. Yep. We also get involved in judicial matters. So we filed multiple amicus briefs, most recent one being in Florida on a fee shifting retroactivity issue. I can't remember the name of that case right now. And then we also get involved in executive and administrative things as well, whether that be, sort of being quasi-mediator between insurance divisions and entities that are, having disputes with those insurance departments or divisions, as well as getting involved in administrative rule changes or opining on bulletins or things of that nature that would have an effect on the industry. So, what makes us unique besides just that more localized focus is that at those higher levels of membership, at the state advisor level and the national advisor level, part of your dues, 20% of your dues, sorry, 80% of your dues are earmarked to a specific state that you designate. So if you're coming from, we'll just say South Dakota, for example, and you want to be a state or national board advisor from South Dakota, 80% of your dues are going to be earmarked to efforts that specifically happen in that state, right? So you sort of start creating a little war chest that is guaranteed to go back to your state. And that ensures that, we remain responsible to helping people in the states in which they come and join us and dedicate their resources from, as opposed to some of the other national organizations where, your dues go into a big pot and, if they want to spend all of them in one state, they can, and there's nothing you can really do about it. So, yeah, that's kind of the couple organizations that I'm working with right now, and trying to grow membership there and really explain the importance of getting involved and being proactive and really caring about what happens, because
Mm.
this this industry and specifically consumer protection um, comes under attack slowly and systematically across a broad range. And if you're not diligent in fighting those little things, before you know it, there won't be anything else to fight over.
It
So,
snowballs. Yeah, it
exactly.
snowballs. Yeah.
Exactly. Yep. So we saw that happen in Illinois most recently.
Hmm.
The public adjusters there, did what they could to get a somewhat decent bill passed in back in 23. Yeah, back in 23. Um, and they didn't anticipate how some of the provisions that seemed harmless would be misinterpreted by the Department of Insurance there and come to bite them, pretty bad. And so now they're coming back this session with new bills to correct some of those issues. Whereas if, potentially they'd been a little bit more diligent in that first bill, we could have saved a lot of this. So,
Yeah,
obviously
avoided it.
2020, but it's important to it's very important to get involved right away, not wait until, the battle's already lost to suddenly
Yeah,
start.
yeah. So just so everybody is aware, if you want to get involved with the Iowa Association of Public Insurance Adjusters, that's iowapublicadjusters.org,
That's
right?
correct.
That's the website. And then the American Adjuster Association, that is americanadjusterassociation.org.
That's
Is that
correct.
right too? So if you want to do either one of those, check those out at those respective websites. Caeden, thank you so much for coming on. It's
Yeah.
been a pleasure. Just remember that Caeden is also the CEO and founder of Swift Public Adjusters. He's in Iowa, Nebraska, and 25 other states, evidently.
Yeah.
And then, of course, you can always reach out to me at Hammers and Hustle at gmail.com, or me directly at Josiah at goodlife-claims.com. And we look forward to speaking with you. If you have any questions, anything like that, just let us know. And we're more than happy to work with that. But on that case, have a great day. Have a great week. We'll talk to you soon.
Thanks, Josiah.